Good morning. I guess we're on the cusp of good afternoon. My name is Andrew McLeod. I'm the President and Chief Executive Officer for Postmedia. On behalf of Postmedia and the Financial Post, I'd like to welcome you all and thank you very much for attending. I would like to first start by taking this opportunity to thank our presenting sponsor, the BDC, as well as our event sponsor and partner to Postmedia, Transcontinental. Canada has a rich history of innovation, but in the next few decades, powerful technological forces will transform the global economy. Large, foreign, multinational companies, many of whom hail from Silicon Valley, have a commanding head start in the race to succeed, and Canada risks falling behind. At stake is nothing less than our national prosperity and economic well-being. In many ways, we are well positioned to succeed, with one of the most educated workforce in the world, ample digital infrastructure, and a reputation for welcoming immigrants and an openness to trade and investment. But the US and China have influenced global trade rules to benefit the massive companies inside their borders. Canada's top talent often work outside of this country, and it is immensely difficult for capital and talent-starved companies to reach the scale they need to compete on a global level. The Financial Post Innovation Nation series seeks to set out to explore what is needed for business in Canada to flourish and grow by speaking to cutting-edge innovators, visionaries, and scientists about the blueprint for Canadian success. We are very pleased to be hosting our second Innovation Nation event here in Montreal and to have the honor of welcoming Paul Desmarais III as our feature speaker. And now, I'd like to call upon our presenting sponsor, the BDC, represented by Tamara Zimmerman, to say a few opening remarks. Please welcome Tamara.
Thank you, Andrew. Bon après-midi, mesdames et messieurs. BDC est fier de faire partie de cet événement aujourd'hui. For those of you who don't know us, the Business Development Bank of Canada is the only bank exclusively dedicated to Canadian entrepreneurs. Nous desservons à peu près environ 56 000 clients et on aspire qu'ils soient les plus compétitifs dans le monde. We stimulate innovation through financing, advisory services, and investment capital. We live in an age where technology is fueling the entrepreneurial spirit. It's never been easier to bring a new value proposition to market as it is today. As we all know, this is leading to an upward spiral of customer expectations and even a blurring of industry lines as companies compete to become more and more relevant in their clients' journeys, further upwards in their client journeys. Chaque organisation dans cette salle aujourd'hui sait très bien qu'elle doit constamment repenser leur proposition de valeur sur le marché pour demeurer pertinent. At BDC, we're doing this in many ways, and I'm excited to be able to tell you about a few of them. Like many of you, we are embarking on a digital transformation. We know that entrepreneurs need the flexibility to bank when and where they need it. Today, any entrepreneur can go online on bdc.ca and apply for a loan of up to $100,000 anytime, anywhere online. Pre-approved clients can go online and complete the whole process of obtaining their loan in about 30 minutes, when and where they want. Our sales force, about 600 plus account managers, are equipped with mobile devices and custom apps that enable them to authorize loans at the client site paperlessly in just one meeting. We've come a long way on this front. Secondly, we aim to help our clients scale and innovate their own businesses. So let's take Hopper, for example. Hopper is a Montreal-based growing tech company. With their relentless ambition, they pivoted their business model and they became an app that tells you when to buy your plane ticket to get the best price. It's very, very cool. It's been downloaded 35 million times, this app. So that's just one example of the type of growth companies that we support through our investment arm, BDC Capital, where we also have our Women in Technology Fund. Thirdly and finally, we walk the talk of innovation. We invest in our own innovation program internally. We conduct experiments with startups, we crowdsource ideas from our employees, and we work with clients and partners to co-design and co-create and pilot the services for the future. À la fin de la journée, l'innovation s'alimente de la diversité, de flexibilité et d'inclusion. Ce sont des valeurs très canadiennes. So I'm looking very forward to our discussion on Innovation Nation today. Thank you very much.
Thank you, Tamara. I would now like to welcome Isabelle Marku to the podium. Isabelle is the chair of the board for Transcontinental, a great partner to Postmedia, as well as a board member for Rogers Communications, George Weston Limited, and of course, Power Corp. Please welcome Ms. Marku.
Thank you, Andrew, and congratulations on your not-so-recent appointment anymore as President and CEO of Postmedia. It's a pleasure to be working with you. Hello, everyone, and thank you for attending today. It's a real pleasure to sponsor this event on the subject of innovation. At Transcontinental, innovation is one of our key core values. Innovation has enabled us to transform our company to being the leading printer in Canada, but also to transform as one of the top 5 flexibles packaging companies in North America, with a footprint in Latin America, the UK, China, and New Zealand. Today, we'll have the pleasure of hearing about innovation from our distinguished speaker, Paul Desmarais III, and well-known journalist and our moderator today, Kevin Carmichael. First, let me introduce Paul Desmarais III. Paul is the chairman and CEO of Sagard Holdings, the executive chairman and co-founder of Portag3 Ventures, and the chairman and co-founder of Diagram. Within the investments portfolio of Portag3 Ventures and Sagard Holdings, he is the chairman of Wealthsimple and Peak Achievement Athletics, and a director of Coho, Integrate AI, and Integramed. Paul is also a senior vice president of Power Corporation and Power Financial. As part of his responsibilities at the holdings, he sits on the boards of Great-West Lifeco, IGM Financial Pargesa, Groupe Bruxelles Lambert, and Imeris. Paul, you must be the most boarded person I know. You are just amazing. Prior to his current numerous roles, Paul worked at Goldman Sachs in the investment banking division in Special Situations Group, at Imeris in supply chain management and strategy, and at Great-West Lifeco in risk management. Paul is a graduate of Harvard College in economics, and he holds an MBA from INSEAD, France. As a longtime board member of Power Corporation, I have witnessed firsthand Paul's drive to have an impact on Power Corporation and also on Canada as a whole as a leader in FinTech. Paul's desire in creating the future FinTech leaders that will shape the Canada of tomorrow, of today actually, is truly remarkable. Now Kevin Carmichael. Kevin is the national business columnist at the Financial Post and a senior fellow at the Center for International Governance Innovation. For more than a decade, he shifted between Ottawa and Washington, writing about economics and politics. For 2 years, Kevin, please come on stage.
Bienvenu Timon, welcome Paul. Thanks for squeezing us in between board meetings.
Quite literally.
no doubt. A couple of housekeeping items before we begin. I feel like I should disclose I got my start in financial wire reporting, so sitting this close to Desmarais makes me want to talk a lot about Power Corp. Paul has assured me beforehand that if I do that, we'll have a very curt and short conversation. That's the job of his father and uncle to talk about Power Corp. So if you were counting on trading off some power headlines this afternoon, I'm going to disappoint you. But there'll be a question and answer session in about 25 minutes, half an hour. So if you want to try your luck then, feel free, but I'm sure you'll get the same no comment that I already received. Comme j'ai dit, les gens ici vont avoir une opportunité de poser des questions à la fin. S'il vous plaît, si vous avez des questions, vous pouvez les poser en français si vous voulez. Okay, Paul, no Power Corp questions, but I am going to put you on the spot for a comment on what's going on with the economy. Seemed to be going pretty well up until a few months ago. Jobless rate is about as low as it's ever been. Corporations have lots of money in the bank, yet the yield curve is just inverted. We've got deficits. People are talking about recession. What's your take? What's going on?
I mean, look, across our businesses, things have been pretty good. I mean, especially on the credit side, I'd say credit losses are at all-time lows, and that's in many ways driven by all-time low unemployment. And so if you look at our balance sheets across our business, they're all going well. If you look at our loan portfolios at Cigar Holdings, they're all going well. All of our underlying businesses tend to be doing well. The reality, though, is that the economy is cyclical. And cycles come and go. And the question is, what is going to break this cycle and what's going to turn that around? There's no clear sense of what it will be, but there's a lot of kind of clouds on the horizon. From electoral uncertainty to geopolitical uncertainty, to over-levered consumers, and so who knows what's going to break this? But the way we manage this at Cigar Holdings is we just make sure that we're extremely conservative in our underwriting, and that we price our capital at the right level relative to the risk that we believe that we're taking. And so I would say that we are avoiding overly cyclical investments. Both of the funds that we've raised in the last 12 months are mostly in cash today, and we're being patient to deploy capital in the right opportunity. The reality is that in the world of FinTech, I believe that overall cycles drive certain dynamics in businesses, but in parts of the financial world, most notably innovation, adoption curves sometimes have a more important impact on the growth of a business or the opportunity that that business faces relative to the economy. And so if I take Wealthsimple, for example, there was a lot of turbulence in the market in Canada this fall. I think the RSP season for the industry as a whole has not been the greatest it's been. Wealthsimple had its greatest RSP season yet. And the reason is because the adoption of digital wealth in Canada is still very low. And I think that throughout the cycle, the growth in that adoption will overwhelm any cyclicality in the economy.
Those clouds you spoke of, are there any that trouble you more than others? What worries you most?
I mean, the thing that I would say we observe the most is kind of mispriced credit. The debt markets are very loose. Corporate leverage in the United States is increasingly high. Now, some would say that, the cyclicality of the economy is lower than it was in the past because households now have dual incomes, because a lot of the kind of industrial economy is no longer the mainstay, and so as a result, the dives in the economy should be lower and less deep, but we can't bet on that, and so I'd say U.S. corporate credit markets, especially around private assets, is risky, and I think private market valuations in general are pretty stretched.
We talk about deficits a lot. Does somebody like you worry about what's going on in Ottawa on the fiscal scene? Does that concern you at all?
Look, I mean, Auto is a long way from my world. You know, it's one of the things I love about the U.S. is, you know, Warren Buffett's saying that 300 people in Washington are not going to hinder the dynamism of 300 million Americans. And, you know, I kind of believe in that. You know, I really believe that as an entrepreneur, the only thing you could do is build your business to the best of your ability. And hopefully the government takes the right stance on policies. But, you know, running massive deficits at an economic peak is probably not the best idea. But, you know, that's, who am I to judge? You know, I'm just a FinTech investor.
Right. Who are you to judge, indeed? Interest rates, though, that's got to be a little closer to home, yes. Right? So, what do you think about what the central banks are doing? Like, we can focus on the Bank of Canada. I mean, they looked like they were on a hiking cycle. They've pulled back now. What's your feeling?
It's tough to know. I mean, like, interest rates will do what inflation does, and you know, inflation's not picking up, and so as a result, you know, even though you have full employment, you're not seeing inflation, too much inflation. Broad-based inflation across wages. What's interesting about our world today is in large part because of innovative companies. You know, there are many forces pushing inflation downwards. I mean, if you think about just the cost of, you know, the computing power that you use every day, you know, think about the power of the iPhone relative to what existed 10 years ago, or think about, you know, a range of different services you use. And so you know, there could be arguments that because of technology and because of innovation, the traditional capacity constraints are disappearing, which may actually reduce inflation long term, which may indicate long-term low interest rates. But again, the one thing that everybody knows is nobody knows anything.
Would higher interest rates help you, though? I mean, you're in the finance business. Classically, when we think about that, slightly higher interest rates or higher interest rates are good for banks or good for financial companies?
I mean, absolutely. I mean, if you look at the, you know, insurance industry, in many ways, you know, high interest rates, a gradual increase in rates is very good for insurance companies. Large volatility in interest rates is very bad for insurance companies. And by large volatility, I mean like 10% swings, you know, not, you know, 50 basis points up and 50 basis points down. If you look at the money management industry, you know, if you have zero rates or extremely low rates and you're charging 50 basis points for a fund and you're expecting consumers to basically get a return of 1 or 2% on the money management, and then you're charging a 50 basis point fee, that's a lot harder of a proposition versus, you know, a 4% return on a fixed income fund and charging a 50 basis point fee. And so, you know, low rates are not great for our businesses, but, you know, we should benefit strongly from a normalization in rates.
The central bank governor values anecdotal evidence from people like you. What would your advice be to him at this moment? Does he need to back off, or can the economy handle higher rates?
You know, he's a lot better placed to decide than I am. And so, you know, one of my defining characteristics is I tend to leave the decisions with the people that know best.
Well, the finance minister says that kind of stuff, but you don't need to say that sort of thing. Let's pivot to FinTech. A broad question first. When these companies emerged on the scene, there was lots of talk about disrupting the whole space. They were going to do to banking what Google and Facebook did to the media business. Then that shifted, it seemed to me. Suddenly all these FinTech companies were in fact just going to partner up with existing banks, and everybody were going to hold hands and go into the future together. But then in preparing for this discussion with you, I started to come across lots of talk of challenger banks. That doesn't sound very kumbaya to me. I look at some of the companies in your portfolio. Coho, for example, talks about how, you know, they're the financial institution that doesn't hoodwink, in quotation marks, their clients, suggesting that legacy finance is doing a lot of hoodwinking. Doesn't sound very cooperative necessarily. Wealthsimple clearly is having no trouble standing on its own. So what's the thinking now? Is it going to be this coming together of these two streams, or are we in fact going to see some of these companies become the next RBC or Goldman Sachs or whatever?
That's a great question. And historically, the questions we've always asked ourselves have been in three buckets. Are the innovators going to figure out distribution? Are the incumbents going to figure out how to innovate? And who's going to partner first? What we're finding is that the most successful startups and the most successful financial institutions are going to be the ones that are able to do all of that simultaneously. And so if you take a Wealthsimple, for example, we have our B2C business, our direct-to-consumer business, Wealthsimple Invest, Wealthsimple Save, Wealthsimple Trade, for a high interest savings account, an investment account, and a kind of stock trading account. And that is a direct-to-consumer business. But we also have a B2B business where we partner with advisors to help them manage their practice, and we partner with institutions to help them increase their efficiency. And we have a range of partnerships that we're working on within our group and outside of our group to make that happen. If you look at, Coho, which you mentioned, one of the reasons why Coho, I believe, can sustain itself on its own is it has a very low customer acquisition costs. And when you think about what startups are going to survive and what startups are not, and what startups to survive will need to partner, it really has to do with what is your customer acquisition cost, how much do you have to pay to get a customer to use your service, and then how much stuff can you then sell that customer. And in the case of Coho, we offer very transparent kind of savings and spending services. In a world where the banks are charging you a ton of fees, and often are charging those that could least afford the fees, the most fees. And so that is something that we'll be speaking about more publicly in the coming weeks. But the reality is that on average, Canadians, I believe, are paying about $300 of fees a year. So if you think about lower income people, that is a pretty substantial amount. And that's the average, and I'd say the lower income people end up paying more because if you're living paycheck to paycheck, the overdraft fees, whatnot, are actually very painful. And so Coho tries to bring transparency to all that. And by being your trusted platform, we look to actually introduce you as a consumer to other services that you might like. And so the fastest growing source of revenue for Coho is what we call cross-sell revenue, which are basically referrals to other services, including Wealthsimple, that could help you save more and live better, if you were to quote Walmart. I believe that, if you look at the financial services industry and the mutual fund industry, we've gone through a whole set of changes that have mandated transparency around fees. The banks have not yet gone through that. And it is my belief that Canadians have a right to know what fees they are paying for their bank accounts and what fees they are being charged throughout the year for different transactions. And that is not a transparency that currently exists.
Do you want to give us a preview of what you say is coming out? What sort of fees have we been paying zombie-like here in Canada for the last while?
I mean, look, we've now, surveyed about 3,000 people, and they gave us access to their bank account information, and we're finding that on average it's $300, and we're finding that on average it skews higher to poorer people, and that's probably not perfect.
Why has that happened then?
Why
how we landed in this situation? Is it on us? Is it because the banks sort of control this space to such an extent that that information just doesn't get out?
I think we've had the Canadian regulator is one of the few regulators in the world that has no customer fairness mandate, right? OSFI has a mandate to ensure the financial stability of financial institutions. That entails profitability. And so as a result, you have a regulator that's been very friendly to kind of, the large banks. And if you just look in the last year, if you look at, on the one side, the government's saying we want more competition, we want more competition, we want more competition. On the other, the regulator is significantly hindering the competitive ability of smaller banks in this country by saying, hey, online deposits will have a worse capital treatment than branch deposits. And so all of a sudden, if disruptor banks can only lend 60% of the deposits they receive versus deposits coming in branches, you could lend 90%, That's a major competitive advantage that you're basically taking away from the likes of Equitable Bank and solidifying the competitive position of the Big Five. And so ultimately, regulations like that are extremely unfriendly to innovation and competition, but the main regulator in the country does not have a mandate to drive competition or customer fairness. And so that's the situation. In a place like the United States, where there are thousands of banks competing for your business continuously, there's no need for kind of major sweeping regulatory changes, because the natural forces of competition, even though Jamie Dimon comes out and basically continuously criticizes aggregation services, he has pipes going into every aggregator and he's feeding them all their data. And in the UK, which has a more similarly structured banking system as Canada, it has taken government and regulatory action to mandate that openness. Same thing in Australia. And you mentioned neobanks or challenger banks. A lot of the leading neobank challenger banks are coming out of the UK as a result of these kind of regulatory changes.
Okay. I think we probably can pivot to open banking and sort of carry on this discussion. It's something that you've been talking a lot about for a year or so now, at least. I'm going to get you to explain to people what that is. I mean, I've written about it a few times, but I don't have millions of dollars at stake on that regulatory change. So get you to describe for people what that is and then why it's so important to you.
So open banking is not longer banking hours, just to be very clear. It does not mean the bank will be open on Saturday. But if open banking really happens, you will have access to banking services on Saturday. Open banking is really a movement that has taken place in a few different geographies, which are really all about giving the consumer the right to have access to his own data, and giving the consumer, empowering the consumer to have transparency in terms of the fees that he's paying, in terms of the types of products that he could be served, and empowering that consumer to then go to certain other providers and say, hey, can you do a better job at servicing me? And so in its simplest form, what open banking is having access to your transaction data and giving you the power to then give that transaction data to someone else so that they could potentially compete for your business. So it is truly a customer fairness, customer transparency movement. And so what that means is that if your mortgage is up for renewal, you could go out and make your salary, your transactions, your savings available to a range of providers that could then compete on getting your mortgage rate down. Someone explained to me that actually the longer you are a customer of a bank, the higher you will end up paying for your mortgage, because they know the odds of you shopping them around or switching is lower. And so as a result, if you were able to give people access to that, when you're a loyal customer to a bank, they might be forced to actually make an effort and give you a better deal and reward you for your loyalty, which is not the case today. And so that's really what open banking is. It's about liberalizing access to data so that a variety of people can access that. It is absolutely critical for fintechs. Because ultimately, being able to have transparency on people's accounts, being able to see how much they pay in fees for a Coho or a Wealthsimple is very empowering to their business model, and we could actually really kind of help educate customers. Because one of the biggest challenges and one of the reasons why open banking is not a bigger movement at the government level is that Canadians are a little bit unaware of how much they've been paying. And one of the things I hope is that we can come up with some very personal stories of people that are in deep financial need and end up being charged a lot for their banking services. And then I believe that fintech and services like Co can actually be great solutions to a lot of those people.
I want to get you to build on that point about why there isn't more political momentum behind these changes. The Bank of Canada, for example, has been writing about fintech, cryptocurrency, these sorts of things for several years now. It left me with the impression that Canada was in the vanguard of countries when it came to these issues. And then I read the report that the Finance Department put out just this year, and you strip the happy talk away, and it's basically a summation of how far ahead basically every major economy is, perhaps with the exception of the U.S. So what's holding it back? You mentioned the general public doesn't seem to be aware of how they're being hurt by the system that's in place right now. Is it simply that, or is there more going on? What explains it?
You know, I think the UK had a lot of public outrage around the banks getting bailed out. There was also a lot of public outrage around mis-selling of financial products in the UK and in Australia. I think, you know, that drove public outcry. I think, you know, Canada got through the crisis pretty well. I mean, in large part because our regulators are very focused on maintaining highly profitable financial institutions, which is really great in a time of financial crisis. I think certain regulators, so like the OSC, the AMF, have really taken a leading stance on customer fairness, but they don't regulate the banks. They regulate, you know, companies outside of the banks. And they've been really, really kind of thought leaders in that space. I think what's holding us back is, you know, lack of ability to access customer data, and we have an extremely antiquated payment system. And ultimately, the fact that you cannot access the payment rails if you are not a bank is a real problem for innovation in this country. And the service that the banks provide to these startups that are trying to access the payment rails through them, there's no incentive for them to really do it well, and they tend to charge extraordinarily high fees to do that because they know they have a, you know, oligopoly in terms of access of that. And so Payments Canada is very active in trying to modernize the payment rails, but the purse, the money purse, is held by the banks. And so we have a regulatory system that's very complicated where, you know, the banks pay for the people that are kind of building the new rails, and, you know, there's basically they're just making sure that nobody really gets in there to disrupt. So one of the things that we've decided to do is we've decided to found a kind of alternative payments association to try and bring together all of the disruptive players in the industry and some of the major kind of US financial institutions that are also kind of annoyed that they don't have access to payment rails, and trying to bring a group together that will work with Payments Canada and work with the Ministry of Finance to help modernize these payment rails in a timeline that makes sense.
When you talk to the banks about this issue, they say, look, yeah, we're going there, but we have to maintain stability. We have to make sure we can protect our customers' data.
Yeah.
Who knows this if we, you know, give access to the payments rails, as you were saying. That's sort of sacrosanct. That's core to what we do. We can't just let any old company attach there. You know, same with open banking, of course. We can't just partner with any old company. We need to be able to protect our data and our customers' privacy. So talk to me about privacy, because of course that is something that is concerning to most people these days. So tell me why you know, this isn't just opening the doors wide for an assault by tech companies on that data. And talk to me a bit about the counter narrative that the banking oligopoly is trying to put forward on this.
They're very good at fear mongering, and you know, by the way, financial services. If you think about financial services advertising for the last 30 years, it's been all about fear. You know, are you ready for your retirement? Will you have enough money? Like the ad where the person goes and is walking on the sidewalk, and all of a sudden the sidewalk ends, and like there's like an abyss. You know, you know, that's been, you know, financial services advertising for 20 years, and you know, there's no reason why they wouldn't do this in their public policy either. You know, the reality is that the argument around privacy and personal data is a totally flawed one, because today, aggregation platforms like Flinks give Canadians access to all the data at the bank through totally unsecured channels, where they are screen scraping bank websites and giving, you know, totally the wrong feeds. The banks spend a disproportionate time continuously changing their website to make the screen scraping harder, creating this like morass of like terrible customer experience, when in reality having a secure API by which data could be transferred from the bank to a platform like Flinks would be far better and far more secure for the customer than different arrays of screen scraping and whatnot. And so that argument, I think, is quite flawed. And in a way, the U.S. started with screen scraping, with Yodlee, had like hundreds of people in India continuously adjusting their system for changing bank websites. And finally, a lot of the banks just got on the bandwagon and built pipes and served the data. And the reality is that, it's not Flinks that has been like broken into and hacked. It's like some of the banks. And the reality is that what we find is that the weak point in your infrastructure is often the most legacy, and I think the banks are just as vulnerable as any fintech out there to being hacked. In fact, I would probably argue that most of the banks are already compromised.
Are the banks evil? Or are they just they're
great at
banks?
business? No, look, I mean, they're amazing competitors. They're fantastic institutions. They serve an incredible good. They're extremely profitable, right? I mean, if you think of the average ROE of a bank in the United States, it's high single digits, very low double digits. I think the retail franchises of our Canadian banks have high teens, low 20s ROEs, double the US and probably double most other geographies in the world. That should be an indication of, one, the strength of their franchise, but two, the protective barriers around their business.
And why have those protective barriers been allowed to exist for so long? Is it regulatory capture? Is it complacency? Is it this idea that the banks are actually core to what we have going here in the Canadian economy? What is it? Or is it all of those things? Why hasn't this changed, I guess?
It's very important for our country to have strong financial institutions because we're a small country, and I think that if we were to hit a crash where all of a sudden we were to lose all of our banks in a crisis, that would really not be good for our economy long term. And so I do believe having strong banks is important. Look, I mean, when you have a regulator whose sole mandate is to ensure the profitability of an industry, the industry will end up being profitable.
Is that the difference between Canada and say, Australia? Australia, the Australian system, the Canadian system, fairly similar, concentrated, that sort of thing, but Australia is actually in the vanguard of companies that are pushing forward on open banking, unlike us, where we're still talking about it rather than actually doing it. So what's the difference between those two places?
So look, we're very engaged in this topic. We had one of my partners testified at the Canadian Senate about 10 days ago. We have been very engaged in open banking. One of our other teammates sits on the Morneau's Open Banking Commission. We actually brought the leader of the Competition Commission from Australia to Canada, and we brought him to the Senate with us for him to testify. And the reality is that the structure of the Australian system is very similar to the Canadian one. And they took their Competition Bureau and gave them the teeth that was needed to really kind of bring reform to that system. My feeling is that there are a lot of things to learn from them and the UK in terms of their approach. But I think we need to do it in the right way, recognizing that we want strong financial institutions in Canada, and go about it that way.
Last question on this subject, and then I have more questions for Paul, but I'll open it up to the room first. I was reading about some of your thinking about investing, and the advice you give to the companies you're working with is that they should first sort of own their home market, build a moat around, or give themselves a moat, or build a moat around their home market, and then go out and challenge the world. And obviously, a global market is what you're going to need to scale. How are any of your companies going to build a moat here in Canada when the current banking establishment controls, what, 90% of the market, essentially? Is your philosophy essentially, if your philosophy is right and it makes sense, does that mean that the Canadian companies in your portfolio effectively don't have a chance to scale?
That's a great question. I think the answer is, one of nuance, where what I often tell people is, because the banks serve all of you, I would assume that every single one of you here is a customer of one of the big 5 banks. I often say they serve none of you, because as a result of trying to create a product that meets everybody's needs, they actually end up with a user experience that meets nobody's complete needs. And my feeling is that there is huge opportunity for companies like Wealthsimple, like a Coho, to develop user experiences that are very targeted and well suited to certain segments of the population. And so if you look at Wealthsimple, we currently have $4.3 billion of assets, about 120,000 customers. They tend to be 35 to 50-year-olds, professional services people in urban areas that have college degrees. That is a niche, and we have built a machine that is very well designed to serve that niche. And that is a niche that I believe we are the best service in the country to serve. And it would be very hard for the banks to compete against that, because if the banks try and replicate Wealthsimple, they would be cannibalizing a whole bunch of their existing business and a whole bunch of their existing channels. And so the way we think about our approach to Canada is we try and find niches where we know there is a mispricing or there is, a misdesigned product and an opportunity. And so, and then from that point of strength, because I think that in Canada we could dominate these small kind of niches, we could then expand to foreign countries from that position of strength. And so my feeling is that there are $4 trillion of investable assets in Canada. 80% of those are held at the banks. The banks allocate you about 1/3 of your investable assets to cash, which, by the way, is a terrible thing for your retirement. These ads like buy a GIC in your RSP is crazy, but it really serves their purpose. And so that is a huge opportunity, because just educating customers that they should not be holding cash in their retirement account if they're 20 years from retirement is a really important mission for us to serve and for us to help Canadians live better retirements and better financial futures. And so that's kind of my answer to that. I see the banks as great competitors, but ultimately my feeling is that we can move faster, we will be more nimble, and we will be way more entrepreneurial than they could ever be.
I've got a really dumb question I'm going to ask Paul while the microphone finds its way to anybody who has a question. So just put up your hand and we'll get to you. Why doesn't Power just divest everything and go all in on this on FinTech if you think there's something there? What do
in the same way that we tell all of our customers at Wealthsimple, a proper investment strategy is one that is diversified. And for the long term, a diversified strategy makes sense. And having, in a business, having a few businesses that are cash cows and rising stars is actually part of building a portfolio. And so we have many businesses that have fantastic franchises. So Investors Group, Great-West Life, fantastic franchises. Many of the businesses that they bought internationally, people don't realize we're the second largest providers of 401ks in the United States. That is a major growth business that we have a leading position in and a license to win. We dominate financial services in Ireland. These are all great positions for us to have. And so as a result, I think having a diversified approach where in many ways those approaches are also very complementary to Wealthsimple. If you look at Wealthsimple, we're currently in 4 partnership discussions with different parts of our group. And so I think having these franchises is absolutely essential to our credibility as a FinTech investor and gives us, in my mind, a license to win in financial services.
Okay. Any questions? I have more, but people tell me on Twitter every day that I don't know what I'm talking about, so I'll turn it over to the room.
Hi. Switching from the investor's perspective for a group which is strong in a sector, investing in startups makes a lot of sense. You have the connections, the knowledge, etc. On the other side, we see that historically, many funds, venture funds, founded by large companies have not tended to be as successful as we could expect. If we look at the most successful startups, Canadian startups, as far as I know, they don't come from Bell or Rogers Ventures or TELUS Ventures, so you're probably aware of that. So how do you adjust to that? Do you think do you take example from maybe other companies which have been successful in starting side startup ventures, and how do you handle that?
Yeah. That is a great question. And so the way we think about our venture business, Portage is actually part of our Cigar Holdings platform, which is basically looking to be a multi-strategy alternative asset manager, basically pursuing uncorrelated strategies in the market, ranging from credit to pharmaceutical royalties to venture to Diagram, which is our startup studio. Our feeling is that in doing that, we try and combine the best of the network of being part of a large group, while also maintaining all the flexibility of being entrepreneurial. And so when you look at one of the reasons why often corporate venture arms fail, is that to make an investment, you need permission and you need buy-in from the business line. That is what kills you. Because if you're trying to get someone in the business line to agree that something that is totally disruptive to what he's thought for 20 years, to agree that that is actually the future, it is a very hard thing to do. And so as a result, we've built an entire business that is totally separate in its decision-making from our operating lines. But once we make the decisions, we work very closely with our operating lines to see if there are ways that we could help each other. But at the same time, we don't limit ourselves to our operating lines. We have 12 different investors in our fund right now, ranging from Industrial Alliance to SSQ to La Capitale to Banque Nationale, and we form partnerships with all of them. And often we form partnerships with companies that are not within our group prior to forming partnerships within our group, because it's often harder to do business with a brother than it is with a stranger. And so, you know, that's the way we've approached it, and I think it's been effective so far because we're able to bring that commercialization up very quickly while not restricting the startup. I think also I have a personal approach, which is one that is rather Darwinian, which is, you know, let the strongest survive. And so as a result, I don't have much emotion about startups competing against each other or startups competing against our main business and there being kind of tensions. And I view my role as one where I manage those tensions and I try and educate people as to what they should be worried about and what they should not be worried about. But you know, the amount of times where, you know, we've received phone calls being like, you know, the hoodwinked, you know, things, or Wealthsimple once wrote an article saying all insurance advisors are sleazes. You know, so you can imagine we had a few comments. You know, my partner and I nicknamed that moment Sleazegate. But these are highly manageable moments. You know, you tell Wealthsimple, you know, do you really need to generalize that all insurance advisors are sleazes? Like, how about you partner with an insurance advisor and write a really interesting article on life insurance? The result was Wealthsimple wrote an article on should you buy term or universal life, which was probably the best article on that topic I've ever read. And from my perspective, it helped me understand for the first time why you should buy term or universal life insurance, even though I'd been on the board of an insurance company for 3 years. And so, you know, I think when you channel energies in the right ways, you could deliver the right win-wins. But, you know, the reality is in a lot of cases, I mean, when our COO ad came out, about, you know, how, you know, the banks were literally evil and they were sucking the dreams out of the brains of people. You know, we got a few calls from like our LPs being like, hey, you do realize we are a bank and you're portraying us as like dream suckers. You know, but you kind of got to let these people be creative and basically say, look, you know, it's some French movie maker decided to do that, you know.
You talked about how Wealthsimple got maybe some life lessons to be a little more polite. How's it working the other way though? How have having all these new companies in your stable influenced sort of the legacy finance that that's been the core of power for a long time now?
I mean, look, we've learned a lot in the last years. I mean, I'll give this. This is a perfect example, right? 3 years ago, when we announced the Wealthsimple deal, we had a month-and-a-half long debate on whether or not we should have a press release announcing the partnership. We then negotiated the press release for 4 months. And because we basically said, hey, Power Financial invests $30 million in Wealthsimple, a kind of digital advice company, and then it came black-lined from one of our companies with basically everything black-lined saying, Power Financial invests an undisclosed amount in an undisclosed company that does an undisclosed service. and that obviously didn't work. And what we actually learned is the importance of media and the importance of leveraging media to get our messages out. And I think that is something Wealthsimple is extraordinarily genius at. And just 3 years ago, the message to me was like, never talk to a journalist, and here we are. So
you take that message back to your father and uncle too. We'll do one of these. Sorry, I saw some hands, but I used my privilege to jump over them. There's someone back here in the back. There's someone right in front of me. So we'll get to you next.
In this age of volatility, it seems like you're long on everything. Do you have any short positions, and are you selling the bank short?
No. So given my belief in the competitive positioning of the banks, I would definitely not short the banks. And so there's a lot of hedge funds in the United States that have very negative views on the Canadian banks. What is it, Steve Leisman or Steve, the guy from The Big Short just announced that he's increasing his short of the Canadian banks. I was actually with him 2 weeks ago. And look, I mean, no. The Canadian mortgage market is extremely different than the U.S. mortgage market. The Canadian banks have a very different competitive position than the U.S. banks. They are much more prudent in their business. I mean, I think shorting the Canadian banks, I don't think we're going to have the meltdowns that you had in the U.S. In terms of being long everything, I mentioned earlier that both my funds are 70% in cash. And so we are waiting for turbulence. And my feeling is that in turbulence, there's opportunity. And so, the perfect example of that was we just became a very large shareholder of the leading digital auto insurer in Greece. And that was an opportunity that came up because a hedge fund got in trouble in Greece and had made this investment, and they had to liquidate. And so we were able to buy their stake at a 25% discount to the price we'd invested in this company 2 years ago. And so when you are patient and you wait at the sidelines and I often say that, business success is a mixture of luck with preparation for luck and positioning for luck. And so I believe that our role as a platform is to spend a lot of time right now preparing ourselves for luck and positioning ourselves for luck, because that will drive, hopefully, optimal success in a volatile environment.
Oui, bonjour, M. Desmarais. On peut poser la question en français?
Il n'y a pas de problème.
Oui, merci. Power a déjà été impliqué avec du proprio énormément. Je voulais savoir pour Wealthsimple, vu que je vois les similarités, quelle est votre stratégie pour tenter de surmonter les peurs des gens de pouvoir fonctionner seul et pouvoir se libérer de frais énormes? Est-ce que vous avez une stratégie en place pour collectivement?
Oui. C'est une très importante question. Alors, notre stratégie a plusieurs facettes, plusieurs éléments. Élément numéro 1, c'est campagne publicitaire assez agressive. Alors, vous voyez beaucoup de pubs de Wealthsimple, vous voyez beaucoup d'articles qu'on écrit, et tout ça bâtit la confiance. Élément numéro 2, c'est Wealthsimple n'est pas un robot conseiller pur. On est du conseil financier digital. Et ça, c'est où est-ce que tu peux ouvrir ton compte totalement en ligne, mais si tu veux parler à quelqu'un au téléphone, il y a quelqu'un qui est toujours disponible pour vous parler au téléphone. Et pour ceux qui n'ont vraiment pas envie d'avoir l'expérience digitale, on a aussi Wealthsimple for Advisors, où est-ce que vous pouvez avoir un conseiller financier qui vous amène l'offre Wealthsimple dans son portefeuille d'offres. Mais la confiance du consommateur, je pense, c'est quelque chose de très important à bâtir pour être capable de bâtir des FinTech. Et je pense que c'est une des barrières les plus importantes à avoir du succès. Mais aujourd'hui, avec 120 000 clients, avec une croissance de 2 à 3 000 clients par semaine, je pense qu'on est très bien positionné to overcome that barrier. Une autre chose qui nous aide à surmonter, c'est le fait que beaucoup de nos clients nous réfèrent des amis. Alors, si on regarde Coho, 70% de nos clients qui ouvrent un compte Coho viennent à travers l'acquisition organique, des gens qui recherchent Coho en direct, ou qui sont envoyés à Coho par un ami qui est déjà client. Et l'expérience client qu'on a à travers nos solutions, à cause des NPS qui sont dans les 70 à 80, génère beaucoup de nouveaux clients.
Question there, Paul.
Hi. Oh, sorry. Yeah. I'm sure you watched like the Apple thing this week. Yeah. And you see Apple doing a credit card. You see Facebook is going to go into banking. You talked about greasing up the wheels to open up banking and all that. Are you worried that the big tech monopolies that are global, that are much bigger, they've got massive amounts of money, once you've greased it up, you've opened it up, they're going to come in and eat your market? Is that something?
You know, the Apple credit card is, fantastic. I mean, I was actually watching the YouTube video on it yesterday. And Michael Katchen, the CEO of Wealthsimple, and I were talking, and we were like, wow, that's kind of disappointing. Ultimately, they managed to create something that looks just like Coho. And you would think that Apple would come up with something truly mind-boggling. And by the end of the YouTube video, I was like, wow, there's nothing super special about this. I think that, entrepreneurs can do better. The problem with large institutions, the reason why large institutions, in my mind, end up dying is they end up trying to do more and more things that are less and less related to their core and kind of get more and more distracted with trying to provide services that is not something they're necessarily the best at. And so, will Apple be any different than the big 5 Canadian banks who basically create products for everybody, ending up creating products for nobody? I think it's just a normal cycle of disruption. And at some point, they're going to hit a wall and they're going to retrench. And, very few companies get everything perfect. And my feeling is that these large groups venturing into financial services may work, but it may not work. What I often tell people is that for our platforms to be successful, what you need to believe is that not all 5 of the big Canadian banks will get their digital transformation correct. That's all you need to believe. For Wealthsimple to be a winning platform, what you need to bet on is that one of the big 5 banks will mess up their digital transformation. That, in my mind, is a very believable investment thesis.
So you could short the big banks, you just have to choose the right one. Was there a question over here, did I see?
Ici. Oui, je vais poser ma question en français, mais vous pouvez répondre en anglais sans problème. Vous avez parlé beaucoup de l'industrie de la FinTech, mais je me demandais s'il y avait des parallèles à faire avec l'industrie de la santé. Oui. Avec Diagramme, vous êtes dans Dialogue. Moi, je suis biogénique, on est un laboratoire génétique montréalais qui a commencé il y a 6 ans, d'ailleurs grâce à l'aide de la BDC. Et ce qu'un des constats dans les dernières années, ça m'a impressionné à quel point la génétique, ça devrait être en hôpital, mais pourtant le remboursement, on l'a beaucoup plus eu avec des entreprises privées ou des assureurs. On a commencé un projet avec SSQ et Transcontinental dernièrement, justement, et non pas le système public. Est-ce que vous faites les mêmes constats de l'industrie de la finance avec l'industrie de la santé, où il y a des difficultés réglementaires ou une lenteur du public et que c'est le privé là, qui doit faire des initiatives?
C'est fascinant parce que j'ai rarement vu une industrie ou un secteur du gouvernement où est-ce que les dépenses sont tellement grandes et la réponse est tellement claire. C'est quand on regarde une plateforme comme Dialogue. Dialogue est une plateforme de télémédecine qu'on a fondée dans notre incubateur Diagramme. On est maintenant les leaders au Canada dans la médecine en direct à travers le cellulaire. On est la plus grosse clinique au pays aujourd'hui. Le coût d'une consultation à travers une plateforme comme Dialogue est peut-être 1/100 du coût d'une consultation aux urgences. Si les gouvernements adoptaient des solutions comme Dialogue ou donnaient la possibilité d'un dialogue à aller direct aux consommateurs, ça réduirait nos coûts de santé à travers le Canada de manière importante. Et je pense que c'est fou qu'on est en train de aller dans un mur avec nos coûts de santé quand il y a des technologies qui sont disponibles aujourd'hui. Si on regarde Kaiser Permanente aux États-Unis, je pense que 80% des consultations dans leur système aujourd'hui sont faites en ligne. It's a huge opportunity. Du côté investissement en santé, on vient de lancer un fonds dans les royautés pharmaceutiques. Je pense que le monde pharmaceutique va être révolutionné par quantum, big data, AI. Je pense que le processus de découvrir des drogues va être accéléré de manière importante et je pense que ça va mener à beaucoup d'opportunités et d'investissements intéressantes, mais aussi à une augmentation du coût de la santé. Et je pense que le secteur privé doit jouer un rôle important pour aider nos gouvernements à continuer à être capables de donner accès à la santé à tous. Parce que je pense que c'est très important pour le Canada que la santé, le droit de la santé est universel. Mais je pense que si le gouvernement essaie de faire la santé pour tous, ça ne va pas être possible. Et on le voit dans les coûts, dans les déficits. C'est un système qui est, à mon avis, pas soutenable.
Just so everybody knows, we're technically at time, but a couple of my bosses are here. They know I'm terrible with deadlines, so we'll just keep this rolling as long as there's some interest. We have a question here.
People can feel free to leave if they want to leave. I got time.
You spoke a lot about FinTech in Canada, but I was wondering if you could comment a bit more on FinTech like globally. The reason is, for example, so I'm from Singapore, and FinTech is huge in Singapore.
Yes.
It's really at the forefront. The banking system is very similar as to Canada, but what we see is it seems like the adoption rate in Canada is much slower than Singapore. Yeah. And the approach that Canada is taking is focusing on the now instead of the future. I mean, of course, we have to do that to get to the future, but what we see in Singapore is they're actually looking at solutions within Southeast Asia, trying to work collaboratively, so not just trying to find solution outside, but make them come inside as well. So there's a lot of collaboration, so I was wondering if you could comment on that.
So thank you so much for your question, because I actually organized a panel where I had your Singaporean regulators come and speak next to OSFI. And the panel was fascinating because the Singaporean regulator has its own FinTech lab. They are developing real estate tracking solutions in India, the Singapore regulator, and are extremely focused on the topic. The response of our Canadian regulators was, I will not be worried about FinTech until it's systemic. That was the one line. And so it basically contrasts the different regulatory approaches. Singapore is fascinating. I mean, if you look at DBS, which is one of the big Singaporean banks, they launched a digital banking app in India, and I think within a year got 2 million clients. Asia is truly at the forefront of everything that is FinTech. You look at WeChat and how WeChat is revolutionizing the kind of digital experience in China. It's truly incredible. We spent a lot of time thinking about that. We actually have one of our partners based in Singapore. His wife is the CNBC anchor there. And so we spend a lot of time thinking about this. We're actually investing in the region there, it's interesting. In other geographies, I mean, Europe has major tailwinds because of the regulatory changes. GDPR is a very important change in regulation that is driving the growth of a lot of the startups. You know, one startup in our portfolio, Clark, is a main beneficiary of that. You know, the neobanks in the UK are very important. And the US is just a naturally innovative country where, you know, the people don't worry too much about the regulators until they get shut down.
We are running out of time. I'm going to squeeze in 2 more questions. Yes. There is a web audience. I'm going to say if they want to shut it down, they can go ahead. They keep talking at Bill Maher and whatever after they actually go off air, right? So you're uniquely placed, I think, to give us a perspective on just where we're at in Canada. One of the things we've been trying to do with this Innovation Nation project is just change the channel or explore whether we in fact need to change the channel, start thinking about the economy differently, talking about the economy differently, and then by extension, trying to assess whether we have the right policies in place to sort of succeed in an economy that's based more on intangibles than tangibles, sorry. Your grandfather, maybe the best entrepreneur Canada's ever had, your father and uncle leading a very important company. You grew up in a unique environment, and now you're out there in Europe, in Asia, in the US. Where does Canada sit? How are we doing?
I mean, I often tell people that Canada is one of the only places in the world where the American dream is still alive. Like, you could come from wherever you want, like Vietnam, Africa, Eastern Europe, and come to Canada, land here, be welcomed, get financial banking, get lucky. Like a guy like Michael Katchen. I mean, we met because I bumped into a guy who knew him at the art fair. $200 million later, he's the leader in Canada, and it's just luck. But that luck can happen in Canada. And if I look at all the entrepreneurs that we back, people at Next 36 or CDL, you look at the cohorts of these classes, these entrepreneurship programs that we have in Montreal and Toronto, they are so diverse. And all of these kids have an opportunity to meet that investor that is going to create their success. And that does not exist everywhere in the world. That is a unique thing that we have in Canada. And so I'm inspired to be Canadian. I think we have a huge opportunity ahead of us. The talent from all around the world wants to come here. And it needs to be companies like ours that partner with these entrepreneurs and help them build the companies of the future, because that will increase prosperity in our country. That will make our country's system sustainable. Free healthcare, free education. All of that stuff is so important, but we need prosperity in order to pay for it. And I think these entrepreneurs coming here and being given the license to succeed and given the opportunity to be lucky is unique in the world.
What about that constant drumbeat, though, about how Canada's anti-competitive? I'm guilty of doing my part, too. I mean, high taxes, too much regulation. Take your pick. We've heard it all lots of time. I mean, what's your impression of that?
Well, that goes to the deficits. Running high deficits in times of economic prosperity is okay if that does not mean higher taxes. But if the government thinks that it could infinitely increase taxes, it will kill what is our great country. And so that's why I personally believe that we probably currently pay a fair level of taxes. But anything higher than what we're now is probably, I'd say nearly, confiscatory. But I'm still working for the government right now. Call me at the end of July, and that's when I start working for myself. But the trade-off is that we benefit from a social system that makes sense. So I'm not moving to Florida or Alberta. I love Quebec and I want to have an impact here. We built Diagram here. We've created 250 jobs in the city in the last 24 months. We've created prosperity for a bunch of entrepreneurs that are building great companies, and that's my way of having an impact on the city.
Okay, last question, promise. I'm going to test this new openness that the Desmarais family is feeling thanks to Wealthsimple and some of these other investments. There's a Japanese saying I came across that the third generation ruins the house.
Yes.
You're Paul Desmarais III.
Yes. It sucks when it reminds you in your name every day. It's like, God, that 3 is really a curse.
But seriously though, is this something you think about? And
I think about it every day.
Okay, so
I think about it every day, but the reality is that the only thing you could do to overcome that is try your best, work hard, be driven as hell, and try and have an impact on the world. And you're either lucky or unlucky, and hopefully things work out. But I think about the fact that I'm the third generation, and the odds are stacked against me every single day. And but I've benefited from huge privilege, and I've been lucky in so many ways that it is my duty to work as hard as I can to avoid that.
All right, thank you.
Thank you. Thank you. Thank you.